Hi everybody, and thank you for joining Greenstone's webinar today on the EU Taxonomy for Sustainable Finance. We have about 30 minutes today and a fair bit of content to share with you. So with that in mind, if you do have questions as we're going through, then we would encourage you to contact us directly through the GoToWebinar. There's a questions box, so you can direct questions towards us. And if we have some time at the end, what we'll do is have a look at them, but we'll be circulating an FAQ document around soon after the webinar, and we can come back to you with any direct responses as well. The slides and the recording from today will also be circulated around, and we will also be running lots of other webinars, so you can find out more information about those on our website. So my name's David Wynn, and I'm the Managing Director of North America at Greenstone. And I'm joined today by Rowan Woods, who's a sustainability consultant at Greenstone in London, and works with a range of companies to help them track their carbon emissions and disclose to other major reporting frameworks.
Hi everyone, great to be here today.
Great. Thanks, Rowan. So during the briefing today, we're going to give you some insight into the background and key features of the EU Taxonomy for Sustainable Activities. We will be discussing some of the implications for companies and investors, and also sharing some practical tips on preparing for disclosure. So for those of you who haven't heard about Greenstone before, we're a sustainability software company. We work with organizations to be able to help them better manage and report their sustainability information. We've been doing that since 2007 and have users in over 100 countries globally. And we deliver this through our three main software solutions: Greenstone Enterprise, which is used from organizations within their businesses to gather information; Supplier Portal, which is used to capture data from suppliers; and Investor Portal, which is used by organizations to collect ESG data from portfolio companies. So that's just a little bit about Greenstone. And let's kick off with a little bit of background about today's topic. So for anyone who isn't familiar with the EU Taxonomy, it is a classification system which defines which economic activities are environmentally sustainable. And it came about because the EU wanted to encourage the integration of ESG factors into investment decision making in order to ultimately mobilize private capital into sustainable finance. So likewise, for quite a long time, the market sought common definitions for what activities are actually classified as green. And so the taxonomy is looking to help companies, investors, and issuers find that common language to be able to communicate. The regulation requires companies to look at their turnover and expenditures and disclose relevant KPIs in line with the green list of sustainable activities. And Rowan's going to be taking us through that in much more detail on the session today. So even though the regulation's not yet quite been finalized, the key features are already known through several reports which have been published to date. So we thought this was a good time to be able to look at those so companies can start familiarizing themselves with this new EU taxonomy. One thing to note, even though we're talking about the EU, even with Brexit, it's still expected that the regulations will be implemented in the UK, as they are part of the package that the UK government has agreed to implement in domestic law to ease the path towards a potential free trade agreement. So that's just worth noting as well. So with that in mind, I'm now going to pass over to Rowan, who's going to take us through the timeline and the criteria and details around this new EU taxonomy. So over to you, Rowan.